Welcome to the WA Property Q&A, the podcast where I explore the ins and outs of buying property in Western Australia. I'm your host, Peter Fletcher, and each week I interview local property experts to help you to develop a deep understanding of the nuances of buying property in WA. From market trends to legal considerations, no topic is off limits. But before we dive in, a friendly reminder. While we provide valuable information, it's important to note that nothing discussed in this podcast should be construed as personal investment advice. Always remember to seek the appropriate professional advice for your specific circumstances. Now, let's get started and unlock the secrets to successful property buying in WA. Well, welcome to another episode of the WA Q&A Property Podcast. And today I'm with none other than Jamie Harrington. Jamie Harrington is the principal of Hub Residential. Where are you now, Jamie?
In Claremont. We've moved after 20 years in Swanbourne. We've recently moved in the heart of Claremont.
Yes. And Jamie's been around. How long have you been selling real estate in and around the western suburbs, Jamie?
23 years.
Yep.
23 short, long years.
23. Yeah, so and how have you found things in the western suburbs over that time? What have you experienced?
There are cycles, but the demand never goes away.
Mm-hmm.
There is always people looking, and it's a term, aspirational suburbs. People are looking to move there. Mm-hmm. So there is always demand, regardless of market conditions. There are always buyers looking to buy there and renters looking to rent there. People want to live in the western suburbs.
Mm-hmm. And so today I want to really unpack what's going on in the western suburbs. You know, how's the market in the western suburbs? So when you're at a barbecue, what is the most common question that people ask you?
How's the market?
And what's your answer?
The market's great.
Mm-hmm.
The market we've just been through a surge. Post-COVID, depends on what suburb, it's somewhere between 30 and 50% growth. We're still lagging the eastern states in saying that, but the market is strong. Every property that we have for sale, regardless of price point, we have lots of inquiry.
Mm-hmm.
Lots of inquiry. In fact, I'm thinking of one last week, 10 days, a townhouse in Dalglish, 10 days on the market, over 90 genuine inquiries.
90?
90, yes.
Wow. And did you open the home?
Twice.
Yeah. And how many people came through the home? Those home opens?
It would have been mid-30s, so a lot of inquiry. But when they got the price point, the price guide, that discouraged some. So it was premium. It was premium property and premium price. And so what happens is that discouraged some buyers, and the genuine ones came along, and it was a multiple buyer situation. We set a date in the end, and it was hotly contested.
Mm. And that's for a townhouse in Dalglish?
Yes.
Wow.
And by the way, the only property for sale in Dalglish.
The only property for sale, right?
So it's strong. So to answer your question, the barbecue response is the market is strong, and the market is strong across price points.
So there's no like sweet spot in the market?
The most sought after properties are family homes. And the surprise or the sleeper for me, and what's gathered momentum over the last few years, is apartments. Apartments are finding their feet.
Really?
Yes, they are. So, and that's across price points as well. I think that the mindset of the general West Australian is changing. 10, 15 years ago, it was they were a hard sell. Now, I look forward to them.
Really? Okay, so I was talking to Derek Baston, who's a real estate agent in Victoria Park, and my experience with property in and around Victoria Park, and I've got a fair bit of experience, is that apartments were on the nose. They were a listing that real estate agents traditionally didn't really want. They'd take them on, but they didn't care if they didn't get them. And Derek said, well, no, that's not the case anymore. They're selling. And you're saying the same thing in the western suburbs?
Yes, I am. So it's a change in attitude towards apartment living. And I think what happens is it's also a price point too. So it's entry level into the area. So you've got a lot of young people looking to live there. Convenience is a major thing for them. Having a backyard is not necessarily something that they all want. We've also got a lot of people coming in from overseas who are used to living in apartments. So they come and they're quite happy to buy an apartment.
Mm-hmm.
So yeah, it's certainly changing attitudes.
As I've been thinking about the market, I've been calling it a returns-driven market, where a lot of the demand for these sorts of properties are coming from investors. But what you've just said is that that's not the case. It's coming from owner-occupiers. Is that a fair assessment?
A fair assessment, yes. More owner-occupiers. The investors are reasonably light on the ground. We're seeing a return, but not... we're not being bowled over by the investors. I think there's... Over a number of years, they've been discouraged from the market. So
really?
Yes. I mean, the statistics support that. I mean, in terms of... our rent roll's a classic example. I mean, a lot of our owners are considering selling. I mean, it's... Even though rents have gone up, and they have gone up, we were talking to our property managers this morning, to the tune of sort of 40% in the last, or since COVID, really, so last 3 years.
Mm-hmm.
Of course, interest rates have gone up, and if people have holding costs, it's all of a sudden the rents haven't kept pace with their holding costs. And of course, legislation is always threatening to, well, it's not encouraging investors, let's put it that way.
Mm.
So, yeah, we're not seeing a lot of investors buying. We're looking at some offloading. A lot of our apartments are going to first home buyers, a lot of them.
So that's almost in the western suburbs a reverse returns-driven market where the returns aren't great and people are saying, well, we're just going to get out of the market and we'll put our money where the returns are.
Mm. In fact, I just had one of our biggest investors within our company, our portfolio of properties, who has said, Jamie, let's just move on the bottom part of the portfolio. Too much trouble, too much effort, not enough return.
Mm-hmm.
I'm better off going and putting those funds in a managed fund where there's a better return and no heartache.
Mm-hmm. Mm.
Couldn't argue with it.
Yeah, yeah. You mentioned before about the entry level into the western suburbs.
Mm-hmm.
What does that look like? What number are we talking?
One bedroom apartments around 500,000.
Mm.
So nice apartments. We're looking at, in fact, in saying that, I'm talking about what's most often sold. There is less than that. You can get the one bedders for sort of mid 300s in the older 1960s and 70s buildings.
Yes.
But for the most part, if you want a nice newer property, it's around 500,000 for the one bedrooms.
Mm-hmm. And so that's what people are looking to, if they want to get into the western suburbs, just get their foot in. Mm-hmm. That's what they're going for.
The old traditional property ladder. Get in.
Yeah. Is there any sort of property on them over there that is on the nose that people don't really want?
Land.
Wow.
So land, for all the reasons we're all hearing about in the media, builders are under pressure. You know, what was it last week? A builder a week is going under.
Yeah.
So you're signing a contract, and of course, builders are reluctant to sign fixed price contracts, as they should be. So you're really signing a blank check to build, and you don't know how long it's going to take to build. So it could be 2, could be 3. I've heard even 4 years to build. So land. I've sold land that's now back on the market. Simple fact is people have gone to the builders and said, this is just all too hard. The other one would be properties that need an awful lot of work. So fundamentally, when there's building involved, that's where we're seeing less demand.
I read an article by Mel James, who is I would call him a property guru in Melbourne. He's a buyer's agent, but he's also a selling agent. He runs a company called James Buy Sell. Very, very fascinating character, really interesting character. And one of the observations he made about the Melbourne market is that it kind of punishes anything that needs a lot of work. And it goes the other way, that it rewards properties that are beautifully presented, that it's all finished and you just move in. So that's what's happening in the western suburbs?
That would be a fair assessment, yes.
Yeah.
presented beautifully, homes that there's nothing to do, that's where the premium prices are being achieved.
Mm-hmm.
That's it.
Are people bringing properties on the market that are a bit ratty?
Not on my recommendation.
Yes.
I would suggest they spend a little because the returns are there. So you're having to discount your property. Basically, I mean, of course, we're talking in general terms. You'll be discounting your property if you don't bring it to the market in its tip-top shape.
Mm-hmm. Mm-hmm. So ratty properties that need work and land on the nose. If somebody had time on their hands, time on their side, would you say that buying a block of land and sitting on it would be a strategically smart move?
Yeah, I think it would.
Yeah?
If you can afford to do that.
Yeah.
I mean, not everyone can do that. And most people are in the market to do something now. There's not many people land banking,
Mm-hmm.
Buying it, tucking it away to do something later with it. Not many. I mean, there are some. So, yes, it's a difficult one. There's not many people that would do that. I think in time, of course, they're not making any more land, so it's going to keep going up in value. And as the pressure comes to increase density, I think holding land is a great way to go. But you've got to be able to do it.
And is there much in the way of development happening over in the western suburbs?
There are some apartment blocks happening,
Mm-hmm.
but they tend to be bigger. The rezoning through Nedlands has seen lots of townhouses being built, and they get snapped up very quickly.
Mm-hmm.
So that medium density is the gap in the market in the western suburbs, and I think it's the gap everywhere, where people are coming off bigger properties who are wanting not necessarily apartment, even though, of course, we've talked about apartments are attractive, but for a particular segment. People coming off the bigger blocks in Dalkeith and Nedlands and Peppermint Grove, they don't necessarily want to go into an apartment. They want something between the two.
Mm-hmm.
So that's the medium density sort of villas and townhouses.
Is there any smaller density stuff, house behind house going on? In these local suburbs around here, it's like that's the thing to do. But I kind of gather that doesn't happen so much over in the western suburbs.
No, it tends to be knock over and redevelop.
Yes.
You can get 3 instead of 2. You can build a better product.
Yeah, you can build a better product. I think that's important, and that's meeting your demand from your ideal customer. They don't want sort of something that's a bit half-baked.
No, I mean, ideally they'll have 3 bedrooms, your 2 bathrooms, your main bedroom downstairs, and 2 living areas.
Mm.
So that's the profile of what people are basically looking for.
Mm. Someone said to me recently, I've heard that the market's coming off prices are going down in the western suburbs. And I went, well, that's the first time I've heard it.
First time I've heard it too.
Yeah. So just wrong?
Look, it's wrong.
Yeah.
So what you've got
Bit of tall poppy syndrome, you'd suspect.
And short-term statistics.
Yeah.
So a suburb may have gone down in the 3-month period, but of course short-term statistics are just not reliable. So you may see a negative, -1 or -3% in a quarter for a suburb, but in reality, over the course of the 12 months, that recovers, and it's not really.
Mm.
No, we are certainly not seeing prices go backwards. They've leveled, but we're still seeing the demand is trumping everything else.
Yeah. Yeah. Off the chart from what you're saying. Mm. Mm. Do you have any stories of properties that have, been purchased immediately pre-COVID and then put back on the market recently and achieved a big result? That's a question without notice, I understand.
Yep.
Yeah. The reason I've asked that is old mate Mel James, he told a story, and I'm going to get the numbers wrong, but it illustrates the point. Same property, spectacular home, like really well renovated, same agent, $5 million pre-COVID, and then I think it was $8.5 million just recently. That is like that to anyone living outside of the western suburbs, that's just funny money. It's just like you've just won the lotto.
It's a percentage exercise. I mean, I don't have any specific examples that spring to mind, but what I can tell you is the statistics around that 5-year period, which is post-COVID, just before and post-COVID, 30 to 40 to 50%. That's real. So if you bought a property you would have bought for $1 million in 2019 was probably worth 1.4, 1.5 now. So it's that is happening.
Yeah. Now tell me, because when you think about when us people from the south of the river, like
Us people.
yeah, us tough people. When we imagine the western suburbs, we kind of imagine this gentrified way of negotiating, that it's sort of different over in the western suburbs. Is that the case? Or is it?
No.
No?
No, of course not. A negotiation is a negotiation no matter where you are.
Yeah.
And a lot of the people we deal with are business people, and they're used to negotiating. So it's every negotiation, there's no such thing as an easy one. Put it like that.
Yeah. So there's some sleeves rolled up. We'll get into it, and
absolutely.
Yeah.
No one wants to pay more than they have to, and no one wants to sell for less than they have to. So yes, every negotiation is hard.
So I talk to people dealing with real estate agents a lot, and the common problem they have is getting their name on the title. They want the property, they make an offer. Had one very recently sent me an email. Peter, I've seen a bunch of properties. I've made offers over the asking price. I still haven't been successful. What am I doing wrong? What's your answer to that?
Hard one to answer because of the competition. We can't tell people what another offer is, because quite often we'll be setting a marketing campaign or sales campaign, and we end up having a tender. It turns into a tender. So all offers by a certain date, certain time and date. So what you've got is, Peter, I'd like your best offer, please. And you might say, oh, what does it need to be? And I said, well, I actually can't tell you what that offer needs to be. All I need is your best offer. And I'll coach you best I can, but I certainly can't tell you what any other offer is. That's the rules of the game. So if they're missing out, it's because they're the underbidder. They're not offering. And I must say, over the last few years, I have had people saying to me in making offers, I'm aware that I'm paying above market here, but I'm not missing out again. And so you end up with one offer which is spectacular, and it's because they've made 3 offers, they've been looking for 12 months, and they're not missing out.
Have you seen any offers like that where you've gone, whoa, they've paid a long way over where I thought this property's worth?
Yes.
Tell me, without mentioning the exact details, just tell me, give us a story, and I'll just get you to sit a little bit closer to the mic. Sure.
In the course of the last few years, 10% above the next best offer is not uncommon.
Okay.
So when you think of, say, $2 million, someone's paying 2 and someone's paying 2.2. At $3 million, someone's paying 3.3 versus 3. So you've got someone, a buyer, who's over it, just saying, here it is.
And that's common.
And that is common. It's slowed down just recently. I would say last 6-12 months, not as often, not as frequent. But before that, very common. And it was driving the market. Comes back to my comment a little while ago, which is supply. Supply is hurting the market. So it's pushing price up. So when I have people coming through home opens or taking through inspections, and they say, and they're just new to the market, they're like, oh, we think the market's going to drop. I'm like, well, good luck with that. There's no indications that I can see that that's going to happen.
They could be right. We just don't know. We never picked COVID. There's just no way to know. They could well be right, but they could be wrong.
That's right.
So as Clint Eastwood would say, are you feeling lucky, punk?
That's it. But they're gambling with a lot. So when they say, oh, I think it's going to drop, I'm like, well, that's not, I mean it. Good luck with that, because the indicators that we see are not suggesting that, but it just might be the case. So, yeah, COVID is a classic example. All the analysts, all the economists were saying, oh, it's going to tank by 30. It actually went the other 30%, that is, went the other way. Like no one saw it.
I remember going to it was an NAB or Westpac seminar was put on by the REWA and the Property Council, or one of those. It was REWA and one of those others, and all the analysts said, well, 2019 has been a year of consolidation. We think that 2020, there's indications that it's going to be a long, steady climb. Yeah, just nice and steady in an upward direction. And then they said, but there's this little thing called coronavirus, and then it went on, and we don't know what's going to happen, and from there, buckle your seatbelts up, kids, because it was a wild ride. Mm.
It sure was. And you think about the sentiment around that too. That time, the sky was falling. I mean, no one knew what was really going on. The period, our first lockdown in April of 2020, the 3 to 4 months after that, all the sales that took place, you look back now and go, oh. And if you're one of those people listening, I feel sorry for you. Because
sorry that happened. Yeah,
the market did dip, but the sky was genuinely falling.
It was falling, yeah.
And we hit this, and we just bounced incredibly for no apparent reason.
Well, when you look back on it, it was thanks to the government just paying everyone's wages for 3 or 6 months or whatever it was. I think it was 6 months.
And the other major player at that time was money from overseas. A lot of expats from here, so Perth people or Western Australian people living in the east or overseas, buying via video, sight unseen. That made up a fair part of our market.
Talking about sight unseen, I made an offer on a property just yesterday or the day before, and didn't want to. This is on behalf of a client.
All right.
Yeah, didn't want to risk the property going to market and facing the wrath of the hordes of buyers. And so we made an offer, sight unseen, just to try to take the property out of the market. Are you still seeing a lot of that sight unseen action?
It's different. It's a different scenario. So the overseas or interstate buyers buying via video link basically, or WhatsApp or via your iPhones. That was a different market to this one. Off-market sales. I mean, I do see off-market. They're not common, but they happen. I personally, as a selling agent, cannot comprehend why you wouldn't take it to the market, unless there are privacy issues or there are extenuating circumstances. Given the fact that there is incredible interest out there in almost every property, why would you show it and sell it to the first buyer? So sorry, Pete, about this, by the way. No. Why would you show it and sell it to the first buyer as opposed to taking it and looking for the best buyer?
Mm. Yeah, when you can put a property on realestate.com, 90 inquiries, genuine. Why wouldn't you take it to the market? Yeah.
Absolutely, across the board. And pricing real estate is rubbery at the best of times.
Mm-hmm.
No one actually knows exactly how much the market is prepared to pay for any particular property.
What is your take on, like, you go into a market appraisal, what is your kind of, like, if you could get it within 5% or 10%, what's your sort of margin for error?
Appraising property these days has become a lot more general in terms of your pricing discussions because of that. So we're talking low millions or mid millions or high millions as opposed to 1.2 to 1.3, because who's to say someone's not going to pay 1.4 for something that someone else will pay 1.2 for? It really is and that's the supply discussion again, right? Because of the demand, there's not enough supply, so the demand dictates the fact is we need to keep this very loose.
Mm-hmm.
And I think you'll find that almost all through the Western Suburbs. A lot of propies don't have a price at all when they go to the market, drives the buyers.
They hate it.
Distraction. Everyone hates it.
They hate it, yeah. And they're always calling, like, my first question when I call up about a property is, what are you guiding on this? And in most cases I'm given a decent price guide, but some are incredibly off, out, inaccurate, low.
Everyone's looking for a price guide. I mean, I was chatting about this with a seller just yesterday. If you walked into a shop and nothing had a price on it, you'd walk straight out.
Sure.
We live in a world where very little is priced,
Mm.
and we're hoping that people have a general sense of it. Well, in the markets that we're in, properties in the next street around the corner vary wildly.
Mm.
So people are working within a budget, and before they invest their time in it, they want to know, does it sit within their budget?
Mm.
It's a fair question, and I understand it. So I do like to go to the market with a general price guide, whether it's the low, mids, or highs.
Mm-hmm.
We might have a week on the market without a price at all, and just gauge the genuine interest in the property. Although we know it's going to, almost every property will have a lot of inquiry,
Mm-hmm.
but we give a price guide once inquired upon.
How does a buyer get their offer? Aside from price, how does a buyer get their offer to the top of the pile?
As clean as possible. So no finance clause, although most offers will have a finance clause.
Mm.
But if it has no finance clause, that's attractive. The terms and conditions, timber pest and structural reports are almost every offer will have them. So there's no.
There are nothing really.
Yeah, they don't differentiate offers. If there's any unusual clauses, that's generally not going to work for the buyers. It mostly does come back to the number,
Mm-hmm.
because the conditions don't vary that much. It's generally the price.
What are your thoughts about people putting time limits on offers?
Yeah, good question. I get this a bit. I suggest people don't do that. Buyers don't do that. And the reason I say that is because what you're trying to do is force the hand of the seller, and it's their property. I think most sellers want to make a decision in their own time frame. If you want to,
What if the buyers plonk down what they believe is a really strong offer? So you're guiding low threes, and they come in at, all right, Jamie, low threes is probably going to mean somewhere between 3.2 and 3.5. I'm going to offer you 3.550 or 3.6. Let's go with 3.6. But I'm not going to sit here and duke it out with a bunch of, other buyers. It's would that be a successful play? I'll give you 3.6, but I'll give you till 5 p.m. tonight to accept it, or it's off the table.
So, Peter, let's talk about that for a moment, because what we've got is both of the owners. Let's take a scenario. Both the owners work, so 5 p.m. today might be a little bit unreasonable.
Let's call it. Say what we're talking on Wednesday. I'll give you till 5 p.m. Friday, but if the home is opened, the offer's off the table.
Okay. So what I suggest you do is don't write that on the contract.
Mm-hmm.
You let me know, and I'll let the sellers know. So because you can pull your offer at any time.
Mm-hmm.
It doesn't need a time clause on there for you to actually say, listen, my offer's now off the table. You let me know it's Friday at 5. I'll let the sellers know it's Friday at 5, and we'll have that discussion. But it's an overly assertive move, in my opinion, to actually put that on the contract.
Mm-hmm. Okay.
And, it's a good offer. So we'd go and of course, at this point in time, we'd have other interest. So, of course, my job is to find out if that other interest is better than that price point.
Mm-hmm.
As I said, the conditions play a part, but mostly the price point. And if it's great and there's no other interest anywhere near it, the deal's yours, Peter.
Yeah. Okay. Right. So what you're suggesting is don't put it on the offer, but make it clear. Do you think that real estate agents would say be thinking to themselves, they'd be saying, yes, yeah, that's fine, I'm hearing what you're saying, but thinking to themselves, I think it's just a bluff. I think if we roll past Friday at 5 o'clock and say to the buyer, the owners have said they are very, very interested in what you're saying, but they just want a bit more time. Leave your offer live.
Well, they're playing Russian roulette with a product that's not theirs to play Russian roulette with. So it's not their decision; it's the seller's decision. So they can
what if their offer was the offer that was 10% above everyone else's? They're at 3.6. Everyone else, and the sellers would know this. You would know this. You've been coaching the sellers at around about the 3.2 to 3.3. Someone comes in at 3.6 and says, I want it off the market. I don't want it open. Otherwise, I withdraw. the sellers are now playing Russian roulette too, aren't they?
That's right. So it is their decision. At that point, we are asked for our opinion and our recommendation. And what you've just described there, you've moved the goalpost slightly. With the decision you've just described there, I would suggest they take it.
Yeah, right. Okay. But the buyer would need to have a strong offer, though.
Yes, that's right.
Yeah, you if you were just in the mix, it'd be okay. Don't try and
Double negative.
Yeah. Don't. You know, if the property was on buyers over 325 or buyers over 32, and somebody came in at 3,250, you just don't kid yourself. Yeah, okay.
Every situation is different, Peter. That's the thing, and that I will say experience does count in this business. We've seen a lot of things. We've been around the block a number of times, so you see it. You look at it. You look at the circumstances. How many people? How much inquiry? How much genuine inquiry? The sales evidence. What's happened? And you know the sales evidence too, right? So every sale has its own story.
Mm. Talking about the sales evidence, Jamie, you as the real estate agent have all that sales evidence available to you, and you have a very nuanced view of that sales evidence. You've probably been through a lot of the properties that have sold. You've driven past them. You live in the area, all that sort of good stuff. So you've got a very nuanced view of the market. But the buyer also has all that information too, through things like RP data and wherever that you can buy that sort of information. Has that leveled the playing field at all? Has it changed the dynamics of the market?
It has, to a point. So we're there representing the seller. The buyer knows we're representing the seller. We're there to get the best result we possibly can. So there's the sales evidence, and then there's this property and where it's going to end up selling. And that does come down to how many other people want it, where it sits in the market, how long ago those other sales were, did they actually see those other properties? Because what you've got is there's data and then there's interpreting data. So I can go to
100%.
any number one of those sites and look at everything like any buyer can and go, I can make a case for a lower price point if that's what I want to do. It's a whole Google thing, right? If you can support your view no matter what you want it to be, just go Google it and there'll be someone supporting you. Same goes with pricing real estate. I can find the 3 sales that support my point as opposed to the other 5 which actually don't. So yes, it's a case of putting it through the right filters to get the result.
RP data has a thing called, I think it's called IntelliVal.
I think it's only a matter of time before someone takes some action there. In fact, I had an overseas buyer who I've been dealing with on and off for probably 5 or 6 years. And this was a couple of years ago now, so it's actually, the story's a little older, but the premise stays the same. They'd sent me and language is a bit of there was a language barrier, so the communication wasn't ideal. They'd sent me an email saying, yes, we'll sell for the right price. And there was an auto valuation of 2.6. And in my mind, on that property, which I knew, I thought, it's a high ones property. I thought, but how am I going to actually deal with this? So what I did, I went to...
The IntelliVal came in at 2.6, and you were thinking high ones.
I went to 5 different AutoVal sites, and I got a range of 1.6 to 2.6. And yet people are bringing them into opens and inspections and showing you the auto valuation reports. And as I say to them, that's not worth the paper they're written on. If you want to get a real valuation, get a real valuer through the place.
That is a big difference, isn't it? Holy.
It's scary how different it is and how readily available they are. And institutions using them. It's fundamentally not right.
From here, where's the market going? Where's it going in the western suburbs?
The western suburbs will continue to be strong. I think we will see the interest rates haven't had that much of an impact. It's the demand supply discussion, which I've mentioned a few times now, labouring the point because that's what's driving it. And I don't think that's going to change. We're not building enough homes. We've got more people coming in than we can cater for. And in fact, I think the other discussion point is rentals. there's a serious crisis in rentals, and I don't think that's going to be solved anytime soon unless they legislate, Airbnb or they encourage people to rent out bedrooms in houses that are vacant. They need to do something pretty drastic to change it, because we've got at least 10-year lag of properties. So that's going to drive the rental side of things. We're already under 1% vacancy rates, and we've got people that are trying to legislate against the rent caps and so on. That won't happen. But you can't encourage overbidding on properties. Well, we're not encouraging it. It's just happening naturally. It's a market that's got its own life. So the rental side of things will continue to be tight, and the sales side of things, while demand is there and nothing will change because it's the aspirational area of Perth, or one of course there's others, but we're just talking about the western suburbs. While that's the case, it will continue. The demand will be there. We'll continue to see strong pricing. And by the way, we're still considered cheap by eastern states standards.
100%. Yeah, if you compare the western suburbs, even the best parts of the western suburbs, against the better parts of Sydney and Melbourne, we get seriously shaded.
In fact, I was just in Sydney recently, and I was looking at how much premium real estate they have, how much harbourfront and oceanfront land they have, and cliffs. There is so much capital in Sydney real estate. We've got a dozen suburbs. So we've got our premium suburbs are small. We don't have many of them.
Exciting days ahead.
They sure are.
It's going to be very interesting. The government have tried to put a lid on the economy, and from all accounts, it's kind of working. But there's still just a lot of positivity in the economy, which is fantastic. It's great that we're finally got a reason to smile again after those lean years from 2015, 2019. Jamie, you're a wealth of knowledge. I've known you for a long time, and you always have been. If somebody is looking to buy or sell in the western suburbs, how would they get hold of you?
Just give me a call. I mean, I'm a real estate agent. I'm very easy to find.
Oh, classic. And do you want to share your mobile number, or do you want to just keep that a secret?
No, it's certainly no secret. 0413 00 9962.
Well, Jamie, thanks again for coming in. Really good to chat, and keep up the good work over that side of the river.
My pleasure.
Important. This has been another episode of the WA Property Q&A podcast. I'm your host, Peter Fletcher, and until next time, best of luck. And that wraps up another episode of the WA Property Q&A. We hope you found our discussion valuable and gained some valuable insights into the world of property buying in Western Australia. Remember, while we strive to provide useful information, it's crucial to consult with the appropriate professionals before making any investment decisions. Don't forget to tune in next week for another exciting episode where we continue to unravel the mysteries of the WA property market. If you have any questions or topic suggestions, feel free to reach out to us. Until then, happy property hunting, and remember to seek the right advice for your personal circumstances. Thank you for listening.